Hey everyone, it's Dale Anderson. Hope you're well. So it's official. China and Brazil just struck a deal to ditch the US dollar. The world's second largest economy is slowly cutting off ties with the United States, and this may affect the dollar. Today, let's discuss exactly what's happening, why this happened, what this means for all of you watching, and if this is something to be concerned about. So this could be serious. After all, the billionaire Ray Dalio previously explained the impending downfall of every major economy as we know it, how these cycles happen on a regular basis, and how we can best prepare for what's to come based on predictable events that happen about once every 100 years. So please don't forget to like, subscribe, and share this. Really appreciate it. So as a quick 1-minute recap to bring you up to speed about what's going on as of now in the last 80 years, the US dollar has been the most powerful currency in the world. This is because the US has held the world reserve currency from 1921 up until today. This refers to what is known as a reserve currency that is accepted throughout the entire world, and since 1945, the US dollar has taken its place as the place due to its safety, resilience, and stability. Like when the system was first adopted, it was used as a way to keep the price of investments, exchange rates, and commodities like gold and oil stable, knowing that no matter which currency you hold, its value of this is pegged to the US dollar. When you have dozens of countries all trading goods and services with each other, it helps to have one universal currency accepted all over the world with a predictable value to conduct those transactions in. Otherwise, you run the risk of getting paid in a currency that might be difficult to exchange, or maybe its value has fallen by the time it's converted back into its native currency. Think of it like this, like a global transfer of value through the US dollars where everyone has agreed to be safe. Of course, the US benefits from this well because more countries use the US dollar, more countries hold on to these dollars, and as a result, the USA has greater buying power. However, the US dollar is apparently at risk of losing that reserve currency status, and to understand why, look no further than Ray Dalio's changing world order. See, as he explains in the book, throughout history, there's a constant changing world order between the leading economy and the rising economy. And over time, one will fall and make way for something new. For example, prior to 1945, the reserve currency was held by the British pound from 1815 to 1920, which lasted for about 105 years following the French Revolution, followed by the Netherlands, followed by Spain and Portugal, and the Venetian gold, and so on. So with the understanding that reserve currencies have never lasted forever, and about every 100 years they change in transition, which lasts between 10 to 20 years. So what causes this, you might ask? Ray Dalio points out that this can be summarized in 3 categories: the rise, the top, and the decline. So during the rise, every new reserve currency, there is a period of peace and prosperity as people bet and borrow on that system continuing. This is typically marked with strong education, critical thinking, character building, and work ethic that allows for innovation, new technologies, and other resources for continual rise in productivity. However, in order to finance that continual rise of productivity, there has to be a system for borrowing and allow people from all over the world to convert their currency into investments that share in the success of making that happen. In fact, Ray Dalio points out that all the success reserve currencies follow the exact same path, leading to, of course, the top. At the peak, the general consensus is that people earn more, their time becomes more valuable, and relative to other countries are willing to do the same work for much less. On top of that, other countries have the ability to take the blueprints of the latest innovation and technology, copy that for a fraction of the cost, reducing the leading power's competitiveness on price. The tipping point, though, comes when people lose faith in the reserve currency, they refuse to buy it, and they would rather sell than reinvest in the profits. So leading to, of course, the decline. Ray Dalio explains that during an economic downturn, if a country cannot sustain its own debts, it must choose between defaulting and printing more money. And of course, they choose to start printing more money. That devalues the currency, it raises inflation, and since the 1990s, the central bank has already stepped in 3 times to finance an industry collapse. So once the dot-com bubble, once during the mortgage crisis, and again during the COVID shutdown. Historically, it's said when a government has trouble funding itself during bad economic conditions or rising inflation, the rich tend to move their assets to places, investments, and currency that they feel safest in, and giving away for other nations to eventually take their spot as the reserve currency. Surprisingly, he explains that these events repeated themselves consistently since the Roman Empire, and even though no 2 changes have been the exact same, it's a similar blueprint we can look at today to determine what might happen in the future. Now, in this case, the value of the US dollar is in fact weakening. See, the dollar isn't just valued at the dollar, even though technically a dollar is always equal to a dollar. Really though, it's tracked against 3 different metrics. The first is the exchange rates to other currencies. The second is the demand to the treasury note. And the third is known as foreign currency reserves, which is a really fancy way of saying how many US dollars are held by other countries. Now, when it comes to the exchange rates to other countries, it is true that the US dollar has gradually been weakening since 2020. However, the USD is more recently higher than it's been throughout the last 20 years, despite the recent drop. Second, as far as the demand for 10-year treasury notes goes, this is essentially just a 10-year loan to the government for people who want a safe place to store their money. They will invest in these and they'll get a guaranteed return on their capital. In terms of the US currency, the value of the USD has been going up alongside rising interest rates, meaning the higher the rates go, the more the demand there is to buy those high-yielding US bonds, which is good for the US dollar, right? Third, in terms of foreign currency reserves, this is where things start to get slightly less optimistic. Because as you can see, the US dollar has been steadily declining as other currencies are beginning to take its place. As CNBC reports, we're now at the lowest level we've seen since 25 years ago. This of course brings us to what is happening right now. On March 29th, it was announced that China and Brazil had struck a deal to trade with their own currencies, ditching the US dollar as an intermediary. This would essentially enable them to trade directly with each other without buying US dollars in the process. And they're currently trading 150 billion a year, so it's no longer going through US. Keep in mind that this is not the first time something like this has happened. China has been slowly shifting away from the US dollar since 2010. Russia and India both ditched the US dollar a year ago, and Saudi Arabia recently said that it was open to the idea of trading in the Chinese Yuan. Not to mention China, Russia, Brazil, India, and South Africa have already joined forces to transacting their own reserve currencies that is separate to the dollar and referred to as BRICS. So this isn't exactly something that came out of nowhere, but it could have a significant effect. In fact, Grit Capital has pointed out on Twitter, Chinese trading volumes skyrocketed upon the Russia and Ukraine war, with sanctions allowing them to gain an even stronger foothold on international trade. But is this something to actually be worried about? And could the US be heading towards a time when it's no longer considered the reserve currency of the world? As of now, even though the future of the US dollar does look uncertain, there's currently nothing close to being able to take its place. Now, of course, it's certainly not the most confidence-inspiring to hear that China's economy could overtake the US by 2030, with the BRICS economies as some of the fastest growing economies in the world. But the US dollar still makes the vast majority of global transactions, and its dominance in the world is not going away anytime soon. Frankly, a lot would need to happen first, and there would need to be a new reserve currency, and notwithstanding a massive black swan event that undermines the US role in the worldwide trade. It might not happen, or it may not be able to take place in a way we could reasonably predict. Of course, this doesn't mean we shouldn't be concerned, with even Elon Musk tweeting that this is a serious issue. US policy has been too heavy-handed in making countries want to ditch the dollar, combined with excess government spending, which forces other countries to absorb a significant part of our inflation. With that said, it's no wonder why Barron's recently reported that the US stimulus following the financial crisis started a currency war, cheapening the greenback to boost America's economy. There's a very real danger that other countries will want to compete, even countries such as Saudi Arabia, or entering a new trade agreement with the likes of China, Russia, India, Pakistan, and 4 Central Asian nations. Ultimately, that will put a lot of pressure on the United States. At the end of the day, the reality is the US dollar is being traded less, there's more competition between other countries, and that's not going away anytime soon. However, I personally believe that the US dollar as a reserve currency is not going anywhere anytime soon. It's still the #1 spot by far, and most of the headlines you see simply one clicks. I think to spend your time worrying about this may not be productive, especially when there are way more imminent topics that should be discussed a lot more, like with regards to raising the debt ceiling, which is likely going to take a significant toll on the markets if both sides can't come to an agreement. I believe it's always a good idea to understand what's going on and why this is happening, but instead of focusing your time on what you can't control, you should focus on your time on what you can control. Whether or not your portfolio is diversified, whether you're saving enough money, whether or not you have consistent income, whether or not you invest on a regular basis into things like property. That's why I believe focusing on those will make you a lot more money than worrying about whether or not there's a possibility, or maybe, or perhaps the US dollar is not going to be the main reserve currency at some point, sometime, possibly in our lifetime. I hope you enjoyed the video. Please share, subscribe, like, it really helps. Thank you so much. Feel free to add me on Instagram and Facebook. All the best. Take care.